What do you think actually happens to Medivation?
Well, I do think that they are going to be acquired. I think that's fairly certain. I think it's just a matter of time and price. Sanofi, if Sanofi is serious, I would say that they should raise their bid. We've been in print saying that we could justify a $70+ valuation on the company just based on their lead drug, Xtandi, for prostate cancer, and they also have a wonderful pipeline. So I think there's a higher bid to come.
Les, is this a specific case in the sector? Do you think that there are more deals to come? I mean, I'm thinking about this morning, Merck's CEO saying specifically that they are looking for more deals to extend its pipeline and that they're not looking for consolidation deals, although they would be open to a bigger deal than the Cubist Pharmaceuticals deal last year.
Right. Well, I think this is specific to Medivation, but I make an observation that as far as we're concerned, the later stage assets are more likely to get acquired than the earlier stage assets. And so we are actually picking through the rubble of biotech to see if there are any late stage companies that have.
Have you found any?
Well, we're still looking, I should say. We're spending a lot of time, those without regulatory risk, or I should say with clinical trial risk. Once you've finished a clinical trial, assuming there's no terrible side effects and it works, you're likely to get approved. And so that's where we're focusing our attention in the biotech space, although I think medical devices are more likely as a sector to do well than biotech. Michael,
do you think that it will be M&A that will help the sector out of its funk?
Well, I sure hope so. I mean, I think there's enough organic growth and enough breakthrough science for the sector to lift itself up off the mat.
Is the sector undervalued right now?
We think the large cap stocks are trading at close to historic lows. They've been lower, but they're relatively attractive on a valuation basis. By the way, we track it, yes. But I'd say the one dysfunction between the desire and the actual realization of M&A is the bull market of 2013 to 2015, where managements and boards saw their stocks at $40, $50 a share.
They don't have stock as currency to buy another stock, even though companies their prices may be beaten down right now.
Yeah, the prices are in the single digits, and everybody remembers the salad days when things were 40 and 50, and they're unwilling to even take a bid at 20, which maybe triple their current market cap, but it's half of what it used to be. So that's the real sticking point in M&A.
But Les, don't these large cap companies, which are undervalued, yes, their stocks are beaten down, but they generate a lot of cash. I mean, can't they go out and even tap the debt markets, which seem to be wide open for the larger caps, to fund a deal if they really, really wanted to do a deal?
Yeah, they could. But again, like Mike said, a lot of these boards are anchored to price far, far away. And so if they don't want to sell, then the only option really is to go hostile. And I don't really detect an appetite on the part of Big Pharma for hostile transactions. I think they'd rather be friendly. And I think there'll be an increase in deal activity after the election once we've gotten past some of this uncertainty.
Yeah, I agree with Les. There were a lot of questions of the managements of the larger biotech companies during the first quarter earnings season, asking specifically, will you go hostile? And pretty much everybody was begging off of that.